August 1st, 2024. Days like this are always really fascinating, and I was actually curious as to the last time we had a day that sold off as many points as this day did. And I got all the way back to August 22nd, 2022 was the last time we had a day where the market sold off, I think it was like 155 points. Oh, this one was even bigger. Oh, wait, no, it wasn't. That's the weekly chart. Sorry. 156 points. This might actually, I don't remember exactly what the August 22nd one was, but it might have been like a couple points bigger or smaller, give or take. But these days are obviously very unusual. It's really not very common that you get such a massive day. Occasionally you'll get, 100-point days, 120-point days, something like that. But it's pretty rare that it ends up getting all the way up to 150. Uh, I thought, I thought it would be cool if it got up to 200 at a certain point. You kind of just rooting for it to keep going and, see what happens at a certain point with these kinds of days. I thought eventually we were trying to get to the last month's low. Last month's low is important. Yesterday, the bulls did a pretty good job making sure we got a bull close on the monthly chart instead of a bear close, which means there will probably be buyers below. This is not the best, the best price action for the bulls, this sort of bar. There will probably be buyers below, but something to pay attention to is the bulls who bought above this bar. What were they hoping was going to happen? They were hoping for another good looking bull bar. And so basically when we got this, what was happening was the bulls wanted to, or traders wanted to see, are the bulls who bought here, are they going to be happy with this bar? Or if they get the chance to sell out around break even, will they do that? And you can see the June high, the bulls saw that they got this bar and they were not very happy with it. And so they're exiting their longs. So that's probably a big piece of this massive sell off is institutions exiting their longs, giving up. And how far down are we going to go? I don't know. When this was closing on its low, I thought we were going to get to at least 5,000. But this becoming a bull close changes everything. So probably better to wait than to make any decisions. But pretty interesting here how big this day got. It's the first day of the, oh, sorry, I just want to see how far off highs we are, like 5%, 5.5%, like 5% off the high. But really interesting. The first day of the month, it's already 160 points. Today was an outside down day, meaning we traded above the prior day's high and then below the prior day's low. When you get an outside down day, there's a 70% chance that the market is going to close in the lower third of the outside down day. When you get an outside up day, there's a 70% chance the market is going to close in the upper third of the outside up day. So to start with bar one, I'm going to just do it like this because this is so dramatic. It's hard to get the whole thing on the screen, so I'll just do this for now. Bar one, a bull bar. It's good for the bulls, but I'm not really sure. Let me just change the study real quick. Not really sure how much higher we're going to go. Today was, the prior day was not overly bullish on the daily chart. If you're buying here, you're buying a breakout above a wedge, 71, 75, and 80. So 3 pushes and a breakout above the wedge on bar one. So bulls, they want some sort of measured move up. I suppose they got the minimum target, which was here, but they'd like to get measured move up, including the tails, maybe somewhere all the way up here. Obviously, we never got that. So good bull bar for the bulls on bar one, but breaking out of a wedge is usually relatively 50-50. And we're running into more important support than the wedge, or sorry, more important resistance than the wedge top would be up here. So it'll be interesting to see if we're able to break far above the prior day's high. Doji bar on bar two. So disappointing follow through on bar two. What does that tell me? It tells me it's probably going to be a trading range open. Normally if we're going to get some sort of strong trend from the open starting from bar one, bar two is not going to be a doji bar. So to me, bar two is disappointing for the bulls, even though it is technically a minimum follow through bar. Usually bulls, like I said, would want a bar that looks pretty much identical to bar one in order to get a possible bull trend from the open. Bar three, another bull bar closing near its high. 3 bars without a bear close. But what are the problems? Well, 3 has a tail on the top. And if you're going to buy up here, you probably need to be really, really picky about what you're choosing to buy. The tail on top of 3 is a little bit suspicious. And more importantly, bar 2 was a doji. So to me, I see bar 3, and I think that we're forming probably towards the high of a trading range. So it's not really a buy at the close bar. Yes, we are probably always in long, but it's not really all that good. It's probably more of trading range always in long, meaning that there's probably going to be sellers not too far above somewhere in this area. Bar 4, a bear bar. It's disappointing follow through for the bulls who bought the close of 3 or bought above 3, but I don't really think that it's worth selling below 4. Some bulls might exit longs who bought up here and just taking a chance that we get a huge rally, but I don't know. It's really not a very good short or a very good long. It's possible that we have bar one, pullback, bar two, pullback, and then we get some sort of third push up for some sort of parabolic wedge. That would make sense. But for now, I would rather just wait and see what happens. Bar five, reasonably good follow through for the Bears. Big tail on the bottom. Again, four was not all that great of a sell. The one thing that four had going with for it is that we broke out above yesterday's high, and there was still a gap with yesterday's high and yesterday's high. So the 588, yeah. So yesterday's high and the bar two high were both areas where there should have been sellers not too far above. And you can see those bears who sold initially got trapped on bar three. However, it was probably not a bull trend from the open. So you had to imagine that we're probably going to get back to yesterday's high and to the bar two high, since that was an open gap. And gaps are going to close on trading range days. Bar six, possibly a second leg sideways to up from the pullback on bar five, from the big bull bar on bar three. So even though bar three is not a good buy, it's probably going to get a second leg sideways to up. And six seems to be that second leg sideways to up. Bar seven, a bear bar closing near its low. For the bears, they're hoping that this is the high of the day, and we're basically starting. This was a pullback, and we're basically starting a bear trend, which we did. What are the bulls hoping? Well, they think that 1 through 3 was, while it's not the strongest thing in the world, it's probably not going to just be a giant sell-off. This was obviously not very high probability. So they probably are not. They're expecting this to be some sort of two-legged pullback. We're probably going to fall below the low of the day at this point. But again, you're expecting some sort of trading range open and possibly a reversal up from that low of the day. Bar 8, consecutive bear bars. So bar 7 and 8 are strong consecutive bear bars. We're probably going at least a little bit lower. And it's reasonable to think the high of the day is in at this point. So you could sell below 8, betting that we've seen the high of the day, and just take a chance and see what ends up happening. Yeah, and if you take this trade 10 times, this isn't even going to happen 10% of the time. I don't think this sort of sell-off is extremely rare. But we're probably going to get at least a second leg sideways to down. And if you sell below 8, you're probably going to make money. The issue with selling below 8, especially when you're newer to trading, is it's gonna trip you up a lot, because the market oftentimes is not going to go straight down. You're going to end up sitting through some sort of pullback, which is pretty common if you're taking if you take a lot of sell the close and buy the close trades where you see consecutive bull or bear bars. You'll probably notice you sit through a lot of pullbacks, and it's really difficult to do that. But the longer you trade and the more experienced you get better at holding through the reversals. So if you take these kind of trades, you have to realize that the first reversal up is probably going to be minor. So you don't really have to get out when you get that first reversal up. And here it never comes. We end up getting another bear close on 9. So 3 straight bear bars, 7, 8, and 9. 7, 8 big and closing near their lows. So you can say, 60% chance we're going to get down here, which is where there ended up being some profit taking. Also, the measured move of 7 and 8 is basically right to the bar 72 close, almost exactly to the tick. Not quite to the tick, but you get the point. We're basically, a point or so away from the bar 72 close. And the bar 72 close was the bottom of 6 straight bear closes. So you have to think that there are bears here who sold and are scaling in, and they're probably going to get let out. So it's not a coincidence that the market created a reasonable trader's equation to sell that close and get all the way back down to this magnet below. 10, more follow through for the bears. A bear bar, but a tail on the bottom. It's bearish, and we're probably going lower, but I'm not sure how much lower. Like I said, this is pretty unlikely to happen. 11, another bear bar. We have a big tail on 10 and a big tail on 11. When I see this, I think we're probably going to end up pulling back pretty soon. I don't know if we're at a measured move down of. So we're basically at the measured move down of the opening range, bars 1 through 4. So usually in this area, you're going to be expecting some sort of pullback. We're within this trading range from here. You could argue the 51 low to this high. So maybe we get all the way back down to this area. But again, this is a really tight channel down though. So there's no reason to buy, but it is probably still going to be a trading range. But the bulls are not doing enough to convince traders of that. And then 12, a big bear bar closing near its low. It's good for the bears. We're probably going lower, but how much lower is the question. This is pretty climactic on bar 12 after a pullback on 10 and a pullback on 11, and then you get a big bear bar closing near its low. So you're basically trying to get a breakout below a tight channel on bar 12. 13 is disappointing. Um, had we traded above 13, it's probably not worth buying. This is so strong that the first reversal up is probably going to be minor. However, I saw 13 and I thought we were probably going to start to go a little bit more sideways. But instead, do bears exit above 13? A lot will, because if you were short below 7, 8, wherever, bar 11 is not a sell below the bar. If you're trading, bar 10 or bar 11, you're selling the close of the bar. You're not selling below the bar. So traders, you definitely don't have to get out above 13, but it might be some sort of lower low double bottom for the bulls with bar 73 from yesterday. So I think some bears will just take their profit above 13 if we trade above it. So what do traders do instead? Well, they decide that bear algorithms decided, well, if this is potentially going to be a big bear trend, look at how strong down the market or we've gone from bar 7 to bar 12. So they sell the close of 13, and there are pretty much two options. The first option is you can sell the close and put a stop above it, and you're only risking 2 or 3 points, and you're trying to make 15 or 20 points. So that's a profitable strategy, selling the close of these bars, where if it goes above it, the bears are going to exit, because occasionally the bears will do this and they'll sell the close of the bar and they won't let it trigger. Your other option is to use a really wide stop. While bears might exit here, this is going to be a minor reversal. Look how strong this move down was from bar 7 to bar 12. So even though we're probably going to bounce a little bit if we go above bar 13, it's not going to go very far. This is, again, a minor reversal because of how strong the opening channel down was. So bears, they sell the close of 13, and we get bar 14, another bear bar. Are there, probably more buyers than sellers below 13? Yeah, but there's no reason to buy, really. The channel down is really tight. However, this is, again, this isn't prime bear price action, for a big bear trend. And that's often the case when you get these days where the market goes, 160 points in one direction. It looks like it's going to reverse, and a lot of the with trend setups don't look all that good, and it constantly looks like it's about to convert into a trading range, and yet it never does. Even in here, this was, to me, I was thinking we were about to convert into a trading range, and yet the market just slowly keeps channeling down. It is notable at this point that we do have open gaps. The bar 9 low, there probably should have been buyers not too far below, and the bulls who bought below bar 9 end up getting trapped. Same thing with bar 10, the low of bar 10 and the high of bar 12. You have an open gap there. And, there was a lot of open gaps today. They were small and they were hard to see, but there was a lot of open gaps. Even when we got down here, you would not think that this was going to be an open gap. Or no, sorry, not that one, this one. The bar 41 low and the bar 45 high never overlapped. So we even had an open gap all the way down here in the middle of the day, still forming open gaps. So that was pretty unusual to get that sort of strength in a trend. 15, another bear bar. We have tails on 13, 14, and 15, potentially forming some sort of wedge on a lower time frame. So again, like I'm going to say all the way down, we're probably going to convert into a trading range here. And then you get a really climactic bar on 16. I think 16 is, more of a buy the close bar than a sell the close bar, if anything. This is really, really overdone to the downside. Again, there's no reason to actually buy the close, but my point being, algorithms are probably going to end up starting to take profits down here because this is really, really overdone. Vast majority of the time when you see this, we're probably going to start to take profits. And we just got below yesterday's low. So at the time, when we started to get over here, I was thinking that, basically yesterday's low might end up being the magnet. We might have to go a little bit lower and get down to the prior day's low before traders look to buy back shorts. And 16 is an extremely climactic bar. It's the best looking bar pretty deep in the bear trend. So we're probably going to bounce a little bit because we just reached the target. 17, an inside bar. But, as much as I'm saying we're probably going to bounce a little bit, if you were a bear and you traded true always in, which is, basically forcing the market to make you get out, even though it might be likely we were going to convert into a trading range, but if you just decided to wait until it did convert into a trading range, if you had sold for any reason, you really didn't have to get out until bar 53. All of this, you could have held through all of this if you traded true always in today. So while I keep saying, we're probably going to convert into a trading range, we were probably going to convert into a trading range after this. It doesn't mean you have to exit. There's nothing wrong with holding through all of these reversals. It's just that a lot of the time, if you do hold through all of this stuff, you're going to end up giving back a decent amount of your profit. For me personally, I wasn't short, but if I was short and I saw bar 16, I would have exited all of my shorts on the close of bar 16. That's a really climactic bar, breaking below resistance. So, sorry, breaking below support. That is probably going to get retested. 17, an inside bar. Good for the bulls to get a bull close, but I don't know how much higher we're going. The only thing that the bulls could have done here was get an inside pattern like they did. Granted, this is not the ideal looking inside pattern. So we had a sell climax on the open and then consecutive inside bars 17, 18. When you get a sell climax on the open and then consecutive inside bars, sometimes you get something like this. Where is it? Not here. I think I classified this as II anyways. Yeah. So sell climax in the open, II, and then a channel up. Sell climax on the open, an II, and then this was actually an unusually strong trend. Now, granted, those sell climaxes are not nearly as dramatic as this one. So if this is going to be a sell climax on the open, and this is the low of the day, and we're going to start to rally, two things. One, the bear bar closing near its low probably should not have happened. If 18 was just a perfect doji or a small bull close, even if it was not very good, it would still be a credible buy, taking a chance that we had a sell climax in II, and we're going to get a weak channel up though. Would be my second point. This is not going to turn into a really, really strong bull trend day. It's probably going to be a relatively weak channel, if anything, and slowly channel back up, and probably towards the end of the day and somewhere in this area, maybe closing the gap with the bar 9 low before starting to go sideways. But 18 is a bear bar closing near its low, which is really not that good. It's still a potential final flag for the bears. Inside patterns are triangles on lower time frames, and triangles and inside patterns are final flags. So it's still a possible final flag for the bears. Sometimes you'll get a breakup below a final flag and then a reversal up. So that's possible. That's what 19 is. I'm not selling 19. It's so climactic at this point. We're so low in the in what's potentially a developing range. There's no reason to buy. Again, you don't want to buy this close because at this point, you're not really sure. But if I had to do something on bar 19, well, first off, these bars, when you get these climactic bars deep in ranges, there's a 60% chance that it's going to be the end of the trend and a 60% chance that you're going to get one more leg sideways to down. But after that leg sideways to down, the market becomes a trading range. So traders know that there's a 60% chance if they buy the close of bar 19 and put a limit order to exit above, in most scenarios, limit order to exit above and a stop order down here, 60% chance they're going to be able to get out up here before they get their stop loss run. I know it doesn't look like it, but that is the math, especially a breakout of a final flag. So we have a final flag 17, 18, and then a strong breakout below the final flag. So again, I am not selling this bar. I think this is an area where traders are going to start to buy back shorts. And again, that is more of a theoretical trade. That's more something that computers might do. But as an individual trader, it's probably better to just wait and see if you get a bull bar closing on or near its high. But that would be one potential way to enter the market. 20, disappointing follow through from 19. So if you sold below 19, you get 20, obviously a bit of a disappointing bar. If we do rally, where are we going? Well, we have open gaps in here, and then we have open gaps higher. I don't know about the higher open gaps, whether we'll fill those in or not. But if we're going to start to bounce a little bit here, I think the first test would be the bar 17 high, the most recent sell climax. You could also argue that bars 18 and 19 were the most recent sell climax, and this open gap with the 15 low. So if this is going to convert into a trading range, I think it's reasonably likely that the top of the trading range is the bar 15 low. 2021, an inside bar. So it's a low one short for the bulls. It's not very good. They're hoping that we're going to just basically continue all the way down and get basically a nonstop bear trend. Again, really, really unusual to get this strong of a day, but always really fascinating to see. I think the largest day I've ever seen. I don't know how many of you were trading during COVID, but I was, I don't know, year and a half, 2 years into trading at that point. And we got a couple of 200-point days to the downside during that really strong COVID sell-off. So that was a pretty fascinating time for trading. I also wanted to mention, as far as the Federal Reserve goes, we had a Fed day yesterday. I'm just going to go on a little tangent about this. So let me just mark where I was. I was here. We had a Fed day yesterday, and basically Powell said that while we're holding rates, we might cut them in September. And if you've been paying attention, he's been saying for like a year at least that he's considering cutting rates, and they're not going to do it. Not if with the stock market in this condition and with the just the pace of the economy right now, it just doesn't make any sense to cut rates. If anything, they're probably going to end up raising them more. I don't see a reason why they would cut rates. The stock market is only down 5% off its highs. Again, I'm not overly knowledgeable in the actual economics of things. I'm just a price action trader, but still, there's no reason to cut rates when the stock market is down 4 or 5%, because the when the rates get cut, it kind of acts as a little boost for the stock market, and it doesn't need a boost at all right now. So he keeps saying they're going to cut rates, but they're going to keep not doing it. And I'm sure they're just saying that because people are getting very frustrated with Powell and his management, or just people who aren't in that space, just regular citizens are upset that everything is so expensive right now, and that it's whatever percentage to buy. I don't know how much car loans are right now, but whatever percentage you have to pay on a car loan right now is crazy, and on housing is crazy. And I'm sure people are upset about that, and that's one of the reasons why he's saying that stuff. But there's no way that they're going to cut rates this year unless we have like some sort of massive sell-off. But even then, I just don't see how they would do that. But what do I know? I don't have a college degree. I don't really study economics that deeply. I just pay attention to this stuff. But I tend to see how the market reacts when Powell makes big decisions, and so I just don't see any reason why they would do that. An inside bar 21. Am I buying above 21? Nope. It's a low one short for the Bears. Probably going to be more sideways in this area. 22, a bull bar. It's notable that 22 does not overlap with the bar 16 low. So we have the bar 16 low, and the bulls who bought below the II, basically a little bit below, are expecting that, yep, we might fall a little bit further. We might get one more leg down, but we're probably going to bounce back up into this area. And they were not able to get out on 22. And it's a really small gap, but it's extremely important. The bulls who were unable to get out are now trapped. And so while there should be buyers below 22, it's not necessarily the end of the world that they couldn't get out here, because it's 3 straight bull bars, 20, 21, 22. So there should be buyers below 22. But if we don't get back to this low, those traders will be trapped. 24 is really interesting, actually. You can see there were traders buying below 22, and then 24 rallied to around the 22 close, and then the bulls sold out of their longs, causing 24 to close on or near its low. So that is disappointing, I think, if you're a bull. You were hoping to get a reasonably good bull bar and start to convert the market into a trading range, and instead the bulls who bought more, they just scalped out. So that's concerning for the bulls, and we now have consecutive bear bars. We're always in short. 25, another bear bar, so 3 straight bear bars. Pretty big tails on both sides, though, so it's not as good as it could be. 26, another bear bar. Strong, closing near its low, 4 straight bear bars, nothing to buy. And then a climactic bar 27. Something about, trends will always form wedges. There's a wedge here, 1, 2, 3. There was another wedge, 1, 2, 3. 1, 2, 3. You could draw wedges all day. But the thing is, if the wedges keep not getting signal bars, then obviously traders can't trade them. And, this whole time, I think a lot of traders were waiting for a reasonable looking buy setup, because we were starting to convert into a trading range, and we just never got it until all the way down here. So 27, a huge bear bar, very climactic, closing near its low, and a breakout below this smaller channel here. Am I selling the close of 27? I would not. I think that it's kind of similar to selling this close. So I would just rather wait. I think 28 is disappointing follow through if you did take the sell. If you took the sell, you were probably hoping to get a really big follow through bar, and instead you got something mildly disappointing, basically just doji bar 28. I thought you could maybe even buy above 28, as silly as it sounds. I just thought this was so oversold, 16, 19, and 28. You could probably just take the buy for a couple legs sideways to up. I did not do that. I made a note thinking it was probably a reasonable thing to do, but it's generally, better not to buy above bear bars. But if 28 was a bull bar, then it would have been a pretty reasonable buy, betting on a bear trap 27. But bulls, the common theme was that bulls had a lot of areas where they should have gotten some sort of reasonable reversal, and they just never really got it. 29, a bull bar, but a big tail on the top. Where are we going to go to? I don't know. 27 is its own most recent sell climax high, so we could rally to the 27 low. This is also a sell climax, 23 all the way through 28, so we could rally maybe all the way up to the bar 23 high. Give me a sip of water real quick. So bar 30 rallies to the basically the bar 27 low, or bar 27 high, and a bear bar closing near its low. Probably buyers not too far below 27, or sorry, below 30. It's not really a great low one short. I think we're going to convert to a trading range. A reversal, basically outside up on 31. Again, it's hard to buy though. If you're looking to buy in this area, you're probably looking to buy more towards a reversal up from down here, not something all the way in the middle of the range. 32, a bull bar, but a big tail on the top. So really not as good as it could be for the bulls. It's really frustrating, I think, if you're looking to buy, because there was no real good area to get in, and now we're in the middle of what was perceived to be potentially a trading range. An inside bar of 33, a high one for the bulls. Do you buy above 33? I probably would not. I would just rather wait. Again, we still need to touch the moving average, and it's been a lot of bars since we touched the moving average. So there are going to be traders willing to sell at the moving average the first time we touch it, which is probably going to be somewhere in here. 34, a bear bar closing near its low. It's a low 2 short, so low 130, low 2 34. Do you sell it? You definitely can. This is a reasonably tight channel up. It's not that tight, but it's a reasonably tight channel up. But I still think probably going to be a trading range, but it's definitely okay to take the short 34. It's a low 2 at the moving average. And if this is going to be some sort of broader bear channel, which was more likely than what we got, taking low 2 shorts at the moving average is reasonable. 35, a big bear bar closing near its low. Good for the bears. We're probably going at least a little bit lower. 34, 35 is going to get a second leg sideways to down. Reversal up 36. It's a higher low double bottom with 28, but 35 was unusually strong. We still might get a reversal up, but this was a bit stronger than I think most traders were expecting. So it makes you wonder how much lower, are we going to end up going lower? And we never actually touched the moving average on bar 34. We got close to it, but we never actually were able to touch it. So I thought that was interesting as well. And then so 36, the higher low double bottom, and it's the same situation as 13. Bears just sold the close, didn't let it get there, and then a bear bar closing near its low. 37, we're always in short. Bear bar closing near its low. You can sell below 37, taking a chance that we're just going to continue down, and this is going to be a big bear trend. If you take it, if you sell below 37 and 38 closes on its high, you just get out. So it's a swing trade for sure, selling below 37, but it's a reasonable thing to do. And you could probably just put a stop above 36. It's always better for your probability to use the wider stop. But realistically, your premise is that this is a bear trend still. And so if you're selling below 37, we should not trade back above 36 if your premise is valid. 38, consecutive bear bars closing near their lows. We have a lot of overlap with the bar 38 tail and the bar 37 body. So a little bit disappointing, I think, for the bears, but probably going at least a little bit lower. The tail is disappointing. The bar overall is not. Again, this is really strong for the bears, 37, 38. So no sign of a bottom yet. Again, the bulls have had a lot of, like bar 19, we probably should start to form a bottom. Bar 27, we probably should start to form a bottom. You get this, okay, we probably should start to, but it just never ended up happening. 39, a reversal attempt up, but a bear bar. So maybe bulls were hoping, 38, 30, or 37, 38, bear trap. 39, big bull bar closing near its high. But why are we getting a bear doji bar if that's going to be the case? So as much as, the contact or the area is looking for some sort of reversal, maybe a wedge, 19, 27, 39, why are we getting a bear doji bar? So probably sellers not too far above. You can see sellers above during 40, bad low one short on 40 since it's a bull bar, and you can see buyers below 41, but you don't want to buy above 41. It's a lower low double bottom with 39, and both of the bars in the double bottom were bear bars, and it's a giant bear trend day. 42, a bear bar closing near its low. Where did I think we were going at this point? At a certain point, the market's been overdone for, 30 bars now. So at a certain point, you kind of just got to accept it might be one of those days. And like I said earlier, when the market starts to do this, I kind of just root for it to go down. And, I'm always curious to see how big of a bear trend day we can get. And this was a pretty large one. I thought we might have to get to to last month's low, which was right here. It was somewhere over here for, this is last month's low. I'm not sure why it's not showing. Oh, right. Because this is a larger chart. Hold on a second. Yeah. So this was the low of last month. I thought we might have to get all the way down there. It was pretty out of reach, obviously, at the start of the day, but all the magnets that we're hitting where it's a 160 point bear trend day. So that's going to happen. 42, a low too short. You sell below 42? Yeah, you can. It's a bear bar closing reasonably near its low. You can take the short. Where's your stop if you sell below 42? Putting a stop just above 42 is a little tricky because sometimes it just seems like a little bit too close. So for me, I would put my stop above 36, and if you get a bull bar closing near its high, you get out. Sometimes it might trade above 42 and then come back down. So I don't know. I would just put a stop above 36 and trade small just to be safe. 43, the doji bar. But again, this looks like kind of a tight trading range developing, 39, 41, 43. So like I say, it could be a final flag. We might start to go sideways soon, but at this point, who knows? 44, a big bear bar closing near its low. It's sell to close, sell to market, sell for any reason. 45, more follow through for the bears. So consecutive bear bars, you can sell below 45. Good for the bears. We're probably going at least a little bit lower. And like I mentioned, always in short and no overlap with the 41 low and the 45 low. 46, another bear bar. So three straight bear bars, 44, 45, 46, closing near their lows. Again, you can sell the close, sell below 44, 45, 46, whatever. Still all sell the close. 47, another sell the close bar, and an outside bar on 48. So traded above 47. So technically a pullback, but I don't know. It's not really that good, obviously. And then an inside bar, 49. So it's an IOI pattern, 47, 48, 49. IOI patterns are often final flags in spots like this, but I don't, again, you can only get so many final flags and keep believing this is going to be the one that works. So maybe it'll be the one that works, but to me, I think we need more proof. 50, a bear bar closing near its low. Good for the bears. We might end up going a little bit lower. Obviously, it's climactic, but we've gotten a bunch of climaxes today, and we keep going down. 51, a bear bar, but a doji bar. So kind of disappointing follow through for the bears who sold. I don't know. Was this an outside bar? What's the low? Okay. So 52 was not technically an outside bar. It did not close one tick below the bar 51 low, but close is close enough. You can argue that 52 is an outside bar and 53 was another outside bar. So it's an OO pattern, 52, 53, after a final flag, IOI, and then an OO pattern. And this is the best looking setup the Bulls have had all day. How high do we go from here? I don't know. 53, a really good, really strong bull bar. We might have to close, how many gaps do we close? Who knows? We could go here. You could argue that this was a new sort of channel. Maybe we go all the way up here. I'm not really that sure if we go all the way up here, though. But when you see 53, you have to exit your short. I think it's credible to buy, taking a chance that we get at least a couple legs sideways to up. I'm not sure exactly how it's going to look because of how strong this bear trend day has been, but it's definitely okay to buy above 53. The problem, besides the obvious problem of how many bear bars we've had today, is that there are going to be limit order bears who are going to sell the first time we touch the moving average, whenever that is. So while it's credible to buy, that you're probably going to end up getting a pullback. So the issue with 54, you can see traders a little bit more eager to buy a 50% pullback of bar 53. They didn't quite get there, but traders more eager to buy a pullback of 53 and try to get a better entry price since 53 was a big bar with big risk. 54 consecutive, really strong bull bars. Can you buy above 54? Maybe, but again, I want to see what happens with the moving average. We're probably going to pull back. So you get consecutive bull bars, we're probably going to get a pullback. But 53 and 54 are definitely strong enough for a second leg sideways up. So I want to see how it looks. And the reality is that when we traded below here, we were probably still 60% chance for going back up here. So you can buy above 70 and think 60% chance we're going to get back to the bar 54 close before the end of the day. An 80% chance you get to the midpoint of bar 70 and bar 54. And then you get a bear bar closing near its low, bar 55. Do you sell below 55? Yeah, you can take a chance that we're going to get a breakout to the downside. But I don't know. 53 and 54 are so strong to me that I don't really want to sell anything else. I'm probably just looking to buy at this point, some sort of reversal up. I think it's probably still okay to hold long below 55. You definitely can get out for sure, but it's probably okay to hold long and just see, because this is so strong that we might get a second leg sideways to up here. Granted, if we were going to go a lot higher, 55 probably should not have closed on its low. So 55, you're expecting a pullback after 54, but you're hoping the bears are going to scalp out and it'll, look like a bit of a weaker bar. Maybe close, around its midpoint. Something like bar 60. If you're going to get a pullback, something like bar 60 would probably be ideal. And then you continue the rally. But 55 closing on its low is definitely a problem for the bulls. 56 consecutive bear bars closing near their lows. We're probably going at least a little bit lower. You know that the bears who sold below or sold the close of bar 55 or 52 and are willing to scale in are probably going to make money. 57, three straight bear bars closing pretty strong. The bulls should not have had three straight bear bars after this. So it's true that we're probably going to run the stop below bar 53, but it's also true that the bulls who are using a wide stop, maybe a measured move down, of 53 and 54 are probably going to make money. 58, another bear bar, four straight bear bars. Yeah, it's sell to close, but I'm not doing it. I'm done selling. Probably sellers above 58, you can see during 59. Probably buyers below 59 during 60. And another reversal attempt up, basically 62, but not worth doing anything. Outside down 63. At this point, what am I looking to do? I would like to buy a small reversal bar, reversing up from down here. So if you could take, it wasn't even really a very good, example of a bull bar today, but just a normal, basically a perfect looking reversal bar on bar 65, just your textbook. Pretend that 70 had closed on its high and put it right here. That's probably what you want to buy. Can you buy above 70? Yeah, it's an inside bar. It's a high one, but you're buying a high one of this breakout. It's not really all that good. It's the first close above the moving average today, so good for the bulls. And 72's body or 71's body was fully above the moving average, but this was a difficult move to get in on. It was probably better not to do it. So for your stop orders today, you can sell below 8. I probably would not sell below 7. I'd probably rather wait. You could maybe sell below 7, take a chance we've seen the high of the day and put a stop above. That's probably not wrong. And 8, you can sell 9, maybe, and then sell the close probably on 11, 10, 11. You can sell below 12. It's climactic, but you can do it because sometimes you'll get this. I would not personally sell below 18 or 19. I think I would just rather wait and see what happens. It looks too climactic to me, but theoretical sell to close. Theoretical sell to close 24, 25, 26, 27. Hard to do. Too climactic for me. Really good trade, actually. Low two pullback to the moving average 35. Sorry, 34. 35, huge bear bar. You can sell that close, but climactic. 37 makes sense. Taking a chance. These are all swing trades. 38 is fine. 42, 44, 45, 46, 47. I thought 53 is fine. You could buy the close of 54, but you're going to have to sit through a pullback. 55 probably shouldn't happen if you're going to rally. And then 56 definitely shouldn't happen. It should probably have already started to, again, even after 55, you could still hold long and hope we're going to start to get a second leg up. And 55 is a bear trap, but I don't know. And then sell the close. And then the last thing was maybe bar 70. 70. So overall, humongous bear day, really good for the bears. Open gaps are obviously a huge key, but it's really hard to look to buy in, or to look to sell when you're getting all these climaxes. The daily chart, obviously huge outside down day. There's been buyers here twice. So if we get back down here, you'd be interested to see if the bulls buy it again and we get another reversal bar up. Again, we're probably just looking for the bottom of the trading range at this point. I don't know where it's going to be, but I do think we're going to close this gap with this high. So I think we will end up getting back to this high. Do we get there tomorrow? I don't know. This was really overdone. Whenever you get a bear trend day like this, there's a 75% chance the next day of 2 hours of sideways to up trading and 50% chance of some sort of follow through on the open. The weekly chart looking like 3 straight bear bars. We'll probably get a bear close tomorrow, imagine. Just because we're reasonably far below, but it's certainly not out of reach. So important tomorrow, actually, for the weekly chart to see if we're able to get a big bear close for the bears or if it starts to go sideways. I was looking the other day at just like potential stocks, and I thought that Intel was starting to look interesting. And what was really interesting to me was if you look at the monthly chart, we're basically in a support zone. This is as much as it'll. See if it'll let me. 20 years. Cool. We're headed into a support zone over here. And obviously everything went down today, went down 5%. And they had earnings after hours. And I was hoping they would have really bad earnings and we'd get a pretty big drop. And we ended up getting it. We got, you can see it's trading at 23.79, 23.80 right now. So I think it's going to be really interesting. Get rid of that. I think it's going to be really interesting to see what happens with that. But, I don't know if I want it for $22, $23 down here, I think it would make more sense. I was more comfortable looking for it at $24, $25 because then you get a bounce. You can probably just buy it if it opens, regardless of how low it opens. You can probably just buy it and hold on for dear life and see what happens with those hodl trades. But I don't know how much lower this ends up going. Obviously, this closes a magnet, 1957, which is very much within reach at this point. But I don't know. I think this is a pretty interesting stock right now. This is also pretty strong on the daily chart, or on with this right here. So this whole thing is probably a trading range. So you'd imagine the bulls who are buying below this low, 24.59, and scaling lower are going to make money. All right, that's today.